Hi there, very good morning. Welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Snehi Shah. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. So let's get started with an eye on the globe and see how the Wall Street fared yesterday. And now it did end higher, extending its gains for a fourth straight session ahead of Thanksgiving holiday. The Dow Jones Industrial Average that climbed more than 300 points, the S&P 500 added about 0.7%, whereas the Nasdaq that gained more than 0.8%, with tech once again powering the rally. AI major Oracle jumped nearly 4% after Deutsche Bank reiterated its bullish view, whereas the Nvidia and Microsoft they also rebounded, helping lift the sentiment across the broader market. Experts are now saying that this is a largely snapback from last week's mid-risk of mood that we saw, and historically Thanksgiving week tends to be strong on equities. So far, all major US indices are headed for their best week since late June. The S&P 500 is up about 3%, Nasdaq more than 4%, and the Dow above 2% for the week. Now, the street is watching signals from the Federal Reserve, with traders pricing in an 80% chance of a rate cut in December. Now, while disappointment from the Fed could trigger volatility, analysts believe that the central bank is unlikely to surprise negatively. Now, despite this week's rebound that we have seen, November has still been challenging for the equities as far as the US market is concerned. This is due to concerns around stretched tech valuations. All the three indices remain on track for a negative month, with the Nasdaq down more than 2%. Now, US markets will remain closed later today, that is on Thursday for Thanksgiving, and reopen tomorrow for a shortened trading session on Friday, that is. So yes, that's about Wall Street. But Snehi, how are things on the crude front?
Oh yes, lots of volatility continues to be there on the crude front. If you take a look at what the crude prices were doing, yes, a little bit of spike is something that we saw, but not before a cool off once again in the oil prices. So if you take a look at the WTI crude, half a percent cut over there, around $58.3 per barrel is where that index was. On the flip side, Brent also about 0.5% lower at 62.8. So continues to be firmly above the 60 mark, no doubt. But yes, we have seen some softness on that front as well. So while oil prices rose on Friday, investors weighed the chance for a US rate cut against the prospect of a Ukraine peace deal. Now, this is going to be very important to watch out for the world of oil and crude. Now, this could lead to an easing of sanctions on major producer Russia. The United States and Ukraine were set to resume work on a revised plan ahead of a Thursday deadline set by US President Donald Trump after agreeing to adjust an earlier version that critics said was too favorable to Moscow. Trump has set a deadline of Thursday for the deal, but US Secretary of State Marco Rubio said on Sunday that the deadline might not be set in stone. So that is something that could also lead to a little bit of volatility in crude prices like we have been seeing, and could be keeping crude slightly under pressure. What happens if a peace deal does go through? A peace deal could potentially lead to a rollback of sanctions that have challenged Russian oil exports. Now remember, Russia was the second largest producer of crude oil in the world after the US in 2024. This is according to the US Energy Information Administration. Uncertainty regarding US interest rate cuts is another factor that's suppressing investors' appetite. So lots is happening in terms of macros and in terms of the peace deal with Russia that could temper or have an impact on what the crude prices have been doing. But on that note, let's flip focus to another commodity and talk about what is happening with gold. Another almost 0.5% cut, 0.4% cut on gold prices, continues to be around that $4,150 per ounce mark, slightly under that. But that is the kind of level that we've seen on gold. The dollar index, however, that has inched lower, marking the dollar price bullion more affordable for holders of other currencies. So the dollar index has been in pressure since yesterday, and that pressure continues. So Kanishka, that is everything that's happening on the global commodities front as well.
Absolutely, pretty volatile moves as far as oil and crude and gold both are concerned. But then let's start off with the top global stories this morning. And like you pointed out, the Kremlin has said that the leak of a phone call between senior US and Russian officials was intended to disrupt peace talks, warning that it was premature to say that a deal to end its war in Ukraine was close. Now, Russia has said that they will not make any big concessions on a peace plan for Ukraine. US envoy Steve Witkoff is expected to travel to Moscow next week with other senior officials for talks with Russian leaders about a possible plan.
And moving on to the US President, Donald Trump has said that he is barring South Africa from participating in the Group of 20 summit next year in Miami and will stop all payments and subsidies to the country over its treatment of a US government representative at this year's global meeting. Trump chose not to have an American delegation attend the recent summit hosted by South Africa, stating that while Afrikaners were being violently persecuted, that's the white Afrikaners that he's talking about, a claim that South Africa has rejected as baseless. Taking to social media, he said that South Africa had refused to hand over its G20 hosting responsibilities to a senior representative of the US Embassy when the summit ended over the weekend.
All right, moving on. In other news, 2 US National Guard soldiers among 3 people were shot near the White House in Washington, D.C. on Wednesday. The White House was put on lockdown after the incident. The government officials reportedly also ordered lockdowns at the main treasury and Freedman Bank building. Now, President Trump has made a statement assuring action while also confirming that the shooter was wounded.
Moving on to some more unfortunate news this morning, at least 44 people have been killed and 279 others are reported missing after a massive fire engulfed a housing estate in Hong Kong's Tai Po neighborhood. Among the ones hospitalized, 45 are in a serious condition. Hundreds of residents have been evacuated to temporary shelters and emergency housing units are being allocated to people needing relocation. While the cause of the fire is still under investigation, the Hong Kong Fire Department has classified the blaze as a Level 5 alarm, which is the most severe in 17 years.
Well, moving on, owners of tens of thousands of properties in England valued at more than £2 million are set to be hit with a surcharge of at least £2,500 from 2028 in what has been dubbed as a mansion tax. Now, the annual charge will come on top of the existing council tax and will increase depending on the price of the property with 4 separate bands. These will go from lowest band of £2 million to £2.5 million, with the highest for those valued at £5 million or more, who will pay £7,500 a year, with the bulk of all properties affected based in London.
On to some US macros then. US jobless claims declined to lowest level since mid-April. Initial claims decreased by 6,000 to 216,000 in the week ended 22nd November, suggesting a rebound in the labor market, which is typically bearish in the push for a rate cut. However, despite this development, Bitcoin rose on the back of the data release, reaching $87,000 from an intraday low of around $86,400.
All right. Moving on to another tech update then. Meanwhile, Apple is all set to retake its crown as the world's largest smartphone maker for the first time in more than a decade as per reports. It is also set to ship more smartphones than Samsung in 2025. The success is being driven by its iPhone 17 series launched in September, which had a bumper holiday season sales.
All right, that's a wrap on all the important global stories that we were tracking for you bright and early this morning. But on that note, we'll slip into a very short break. When we return on the other side, we'll take a look at how some of the Asian markets have opened up this morning. So you stay tuned. We'll be right back.
In association with SBI, best है सबको पता है.
Everyone. But we're not just anyone.
I've made my choice today.
We choose progress over pressure.
The endless sky. I'll
We say no to shortcut
grow
and yes to the strength of discipline,
to fly. I've made my
to the pride of planning, to the thrill of watching our future take shape little by little. We are citizens and you can be one too. Sip karo, citizen bano. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome to Indore, the commercial capital of Madhya Pradesh and a key driver of central India's thriving economy. With its vibrant manufacturing base, expanding startup network, Indore is shaping a new paradigm for business growth. Join visionaries and industry leaders as they decode Indore's transformation into a center of growth and opportunity. IDFC First Bank presents Leaders of Tomorrow, Indore Springboard, exclusively on ET Now. Presented by IDFC First Bank, always you first.
विकसित उत्तर प्रदेश भारत की औद्योगिक और डिजिटल प्रगति का इंजन बनकर विकसित भारत एट 2047 की यात्रा को दे रहा है तेज गति।
विकसित भारत का जो प्रधानमंत्री मोदी जी का विजन है वह विकसित यूपी से होगा और विकसित यूपी से वह तब सब सपना साकार होगा जब आप सभी मिलकर के सामूहिक प्रयास करेंगे।
उत्तर प्रदेश आर्टिफिशियल इंटेलिजेंस, डीप टेक और साइबर सुरक्षा का बन रहा है हब। 45 लाख करोड़ रुपए के एमओयू के साथ उत्तर प्रदेश बन चुका है निवेश के लिए पसंदीदा निवेश गंतव्य।
कोई भी व्यक्ति उत्तर प्रदेश का हो, देश का हो, दुनिया का हो, ये मान सकता है उत्तर प्रदेश अब अनलिमिटेड पोटेंशियल का प्रदेश बन चुका है।
उत्तर प्रदेश लिख रहा है विकसित भारत की कहानी का सबसे मजबूत अध्याय।
इतने में क्या ही मिलेगा यार।
सोना
तू ठीक तो है ना?
अरे गोल्ड ETF, all you need is 200 rupees or less.
Gold ETF, it's Aaj Ka Gold, regulated and backed by Real Gold. All you need is a Demat account.
Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Snehi Shah. Time now to take a look at how the Asia Pacific markets have opened up this morning. And it's a largely very positive day coming in for the Asia Pacific markets as well. Let's start with China's Shanghai Index and see how that one's doing. It's up about 0.2% at that 3,870 odd level. So that's about the Chinese market. Now shifting focus to Hong Kong's Hang Seng Index. That's trading that's taking a little bit of a breather there, 0.3% downtick over there. Trading still managing to hold at 25,850 level. If we talk about Japan's Nikkei, it's up nearly 1.5% right now at that 50,250 odd level. In fact, nearly 700 points of gains is what the index is seeing. So solid gains over there. Now, if we talk about South Korea's Kospi Index, that's also witnessing very positive moves, 1.5% of gains over there as well, trading above the 4,000 mark. Now, yes, that's about some of the major indices. ASX 200, Australia's index, that's also trading fairly higher. About 0.3% gains for ASX 200, trading above that 8,630 level. So yes, that's about some of the Asian indices. But if you take a look at Nifty, yesterday we did manage to close above that 26,200 mark. So solid gains is what we saw for Nifty at close yesterday, and today as well we are expecting a very positive start. For now, the Nifty implied open suggests a start of nearly 67 points of an uptick is what we expect at start for the Nifty. So let's watch out for that. Very positive moves as far as Wall Street, Asia Pacific front, all of the markets, very positive moves coming.
Absolutely. You know, if you take a look at the way the markets closed yesterday, 72 points away to be precise from a fresh all-time high. The GIFT Nifty and the GIFT Nifty spot and futures both, in fact, are indicating that we might breach that all-time high today. So let's see what happens on that front, because also remember that today is also the monthly Sensex expiry. And remember, Tuesday when the monthly Nifty expiry, we did see some cuts in the market, and given the kind of elevated gains we've seen yesterday, a 1.25% gain on the Nifty itself, maybe some profit taking could be on the cards today, also on the back of this expiry, but we'll just have to buckle up and wait and watch. But if you take a look at how the markets performed yesterday, like Kanishka was mentioning, above 26,200 is where we've closed, 26,205 to be precise. So about 1.25% uptick on the Sensex. Similar moves on the Nifty as well. Nifty Bank also was up about 1.2%, so very healthy gains. The broader markets are also looking absolutely resilient. It was names like JSW Steel up about 4%. That was the top Nifty 50 gainer. And as was the case with the entire metals pack, a 2.5% uptick on the Nifty metal on an intraday basis itself. Yes, there is strong moves from metals. You had names like HDFC Life, Bajaj Finserv, Bajaj Finance, all of them did well. On the flip side, Bharti Airtel on the back of that block deal was slightly under pressure. So even if you take a look at the sectoral moves, all the indexes have closed in the green. Nifty FMCG was the least gaining sector, but the gain over there also has been 0.7%. So even the least gain has been quite amplified, and metals, media, Nifty, IT, bank, pharma, auto, realty, PFC banks and FMCG, that's the pecking order of the market day that we saw yesterday. Some outperformers, Natco Pharma was up about 12%. You had big moves coming in on GMDC, JK Cement, PG Electroplast as well. On the flip side, Chennai Petro was lower by 12%, MRPL, M&M Finance and AWL Agri, all of these stocks were under pressure from the broader Nifty 500 group of stocks. So that is how we've summed up yesterday, and yes, all eyes are going to be on whether we are able to A, breach, and second, hold above our all-time high mark. So all of those factors are going to be important at play, given that today is a monthly Sensex expiry as well.
All right, so we'll wait out for that and see whether or not we are hold on to all-time high levels, if at all we touch them today. But which are the stocks that may drive this kind of movement? Firstly, let's talk about Patel Engineering. A big order win coming for Patel Engineering. They've registered an order of 798 crore rupees. This is for coal excavation and transport deal with SECL. So all eyes on Patel Engineering, whether or not the stock reacts much. Next up, let's put the spotlight on the paint sector. Now, Asian Paints is going to be in focus because its arm, Berger Paints Emirates, plans a second plant with 340 crore rupees of investments in Abu Dhabi. Now, the initial production capacity of this plant is going to be 55,800 kiloliters per year. So, we'll watch out for how the market reacts to this latest development on a second plant in Abu Dhabi. So, we'll wait out for that. Asian Paints is going to be in focus. Next up on the list is NACL Industries. Now, this one is in news because it is announced that its board is going to consider a fundraising on December 1st. So, we'll watch out for that and see how the market reacts to this latest announcement. Muthoot Finance next on the list. Yet again, a fundraising is what they have announced earlier, and today is the day when the board is going to mull fundraising. So, let's watch out for that, and we'll see how the stock reacts to it. Next up on the list is Panacea Biotech, where there's a change of guard. Devinder Gupta has resigned from the post of CFO. So yes, a major management rejig is what the company is likely to see after the resignation of Devinder Gupta as the CFO. So we'll wait out for how the market reacts to this development. Next up, let's talk about Brigade Enterprises. Now, this one has signed a lease deed for 4.8 acres of land with electronics technology parks for phase 1 of its Kerala project. That's for the development of an IT infrastructure in Technopark phase 1 of Kerala. So yes, that's a major deal lease that they have signed. It's for a 90-year period. So let's wait out for how the market reacts to this development. We'll wait out for Brigade Enterprises, how the stock is going to react. And lastly, there is Stud Accessories, which is going to be in focus because a very healthy set of numbers is what has been reported. Revenue has gone up to 154 crore. It's up about 6.5% on a year-on-year basis. EBITDA yet again coming in at 30 crore rupees, up 12%. Margins at a solid 19.3%, which is an uptick of about 90 basis points. PAT also very solid, 18% growth as far as PAT is concerned, coming in at 20.6 crore rupees. So lots of stocks to watch out for, very positive developments across most of the stocks, and we'll wait out for how the market reacts to all of them.
Okay, well, so many stocks to watch out for, but that's not it. We have a lot of more stocks to keep your eye out on, and for that, my colleague Ashesha is joining us on the show to tell us exactly where we could see some market action today. Ashesha.
Well, yes, first up, let's talk about Whirlpool, and this is on the back of a block deal which is expected to happen today, where promoters are looking to sell about 7.5% stake in the company. The total transaction is likely to be at around 965 odd crores, and the floor price for this has been fixed at 1,030 rupees per share. So on the back of this block deal, keep an eye out on Whirlpool India. Paytm, meanwhile, news flow coming in over here, where the Reserve Bank of India has now granted approval and certificate of authorization to its arm Paytm Payments Bank to operate as payment aggregator. So they have now received RBI approval, and that was the next step required in order to operate their payments business. So big news coming in for Paytm as well. Jammu and Kashmir Bank, meanwhile, on the back of their fundraising plans, where the board has approved 1,250 crores fundraising. This will be done via QIP. So on the back of this, keep an eye out on Jammu and Kashmir Bank as well. Oberoi Realty has gone ahead and signed a development agreement to redevelop a 4,800 square meter plot. This is in Nepensi Road, an estimated 1.8 lakh square feet of free sale area. So on the back of this new project that they've won, Oberoi Realty will also perhaps see some kind of positive reaction in trade today. Wipro meanwhile has gone ahead and signed a strategic alliance. This is for advanced innovation in frontier technology. Pidilite Ventures, which is a wholly owned subsidiary of Pidilite, has gone ahead and announced a strategic investment in Magic Decor. The company says that this is to scale premium bespoke home decor and expand distribution. Lastly, Ashoka Buildcon, where one of its arm has sold 5 SPVs. This is to a trust for about 1,814 crores. On the back of this transaction that the company has undertaken, Ashoka Buildcon will also be in focus today.
Okay, Ashisha, thanks so much for taking us through that. But while that was the stock-specific action to watch out for, let's also tell you about a bit more amount of cues, or rather everything important that you need to be keeping your eye out on this morning. Remember, once again, we're reiterating it's a monthly Sensex expiry today, and given the kind of gains we've seen yesterday, profit-taking may or may not happen, but could be likely. But shifting focus to some global cues then, the US markets are going to be closed on account of the Thanksgiving holiday, so no momentum, at least on the equity front from the US. From the Eurozone, you'll have the recent minutes of the most recent ECB rate decision meeting. So those minutes will be out as well for a further deep dive on the rationale behind the most recent rate outcome. And from China, you will have industrial profits in terms of some global macros to be tracking this morning. But shifting focus to our markets then, watch out for Muthoot Microfinance. That board is going to be meeting today to mull fundraising. So that stock could be in focus if the announcement comes during market hours. But yes, these are all the cues that we are going to be watching out for very closely in today's trading session.
All right, several cues. There, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Snehi Shah. Time now to take a look at some of the more updates, latest developments that we are getting this morning. And India has revved up its latest rare earth mission and is raring to go. The cabinet has approved a scheme to promote manufacturing of rare earth permanent magnets with an outlay of nearly 7,300 crore rupees for the scheme. The scheme aims at establishing 6,000 metric tons each year of integrated rare earth permanent magnet manufacturing in India. Now, under the scheme, the total capacity will be allocated to 5 beneficiaries through a global competitive bidding process. Each beneficiary will be allotted up to 1,200 MTPA of capacity. In fact, we caught up with experts to understand what this scheme could really mean. Let's take a look.
Rare earth परमानेंट मैग्नेट्स स्कीम REPM स्कीम अप्रूव हुई कैबिनेट में, माननीय प्रधानमंत्री जी ने अप्रूव किया इसको. इसमें फोकस रहेगा एंड टू एंड कंप्लीट इंटीग्रेटेड मैन्युफैक्चरिंग सिस्टम बने, भारत में इंटीग्रेटेड मैन्युफैक्चरिंग फैसिलिटी बने. इस पे करीब 7,280 करोड़ रुपए का इन्वेस्टमेंट होएगा. 7,280 crore rupees will be invested, and the focus will be on the entire value chain. It will be an integrated manufacturing facility. और केवल एक नहीं, up to 5 units will be established. Up to 5 units will be established, each one having 1,200 metric tons per annum capacity.
Okay, that was the word coming in from Minister Ashwini Vaishnav. But let's shift focus. We also had Chief Economic Advisor V. Ananta Nageswaran speaking on the cabinet that has approved the rare earth bill. Let's go across and listen into what he had to say.
No, but obviously it's important. It's a long-term goal that we have to become self-sufficient in these areas, because we don't want our manufacturing and growth aspirations to be held hostage to the shortage of these materials due to whatever factors.
All right, so that's the word coming from top officials, but we also have Prakash who's here with more details on the scheme.
Well, it's a confirmation of our news break as the Union Cabinet has approved rare earth permanent magnets incentive scheme with an outlay of rupees 7,280 crores. So very significant development coming in. This scheme is very crucial in order to achieve Atmanirbharta as far as rare earth magnets are concerned. The scheme has been approved for 7 years, and the production unit will have to be developed within the next 2 years. This is very crucial amid supply side disruptions, and various sectors are going to get benefit. You can look at the structure of the scheme, where the government is focusing on developing entire value chain from extraction to production of rare earth magnets. Along with that, if you look at the sectors such as defense, auto, aerospace sector, electric, among others, are going to get a benefit. Along with that, the government is moving ahead with the target to achieve Atmanirbharta. As per the government's estimate, the domestic requirement of rare earth magnets are going to be doubled by 2030, and therefore government is moving ahead with a clear objective to achieve Atmanirbharta, cut down import dependency by announcing a separate incentive scheme for the production of rare earth magnets. Along with that, the cabinet has also given its nod for the extension of Pune Metro with an outlay of rupees 9,858 crores, where Maharashtra Metro Rail Corporation Limited has been appointed as implementing agency. Last but not the least, the cabinet has also approved 2 new rail projects with an outlay of rupees 2,700 crores.
Okay, Prakash, thank you so much for taking us through all of those details. But let's understand what the market implication could be and what the impact of this announcement could be on rare earth stocks. My colleague Raghav Kalra gives us more details on that.
Stocks to watch out for, as Government of India has given a nod to 7,280 crore scheme to promote manufacturing of sintered rare earth permanent magnets, REPMs. The stocks to look out for under the scheme will be Hindustan Zinc, moving positively and has secured India's first private sector monazite rare earth mining block in Uttar Pradesh with direct rare earth processing capabilities, and it will benefit from its increased demands from domestic rare earth supplies under the PLI scheme. Well, another stock to look out for will be Gujarat Mineral Development Corporation, GMDC. It's a stock that's moving positively, and it's building India's first dedicated rare earth processing hub and actively participating in critical mineral auctions. Its direct operational expansion and its strategies will help this stock to again move positively in this particular sector. Another stock to look out for will be NLC India, moving positively. It secured its new phosphorite and limestone blocks with plans to source rare earths domestically and overseas. Its dual sourcing strategies and new mining block position by NLC will help it to capture more market. Moving positively again. Vedanta is also moving positively. It's the parent company of Hindustan Zinc with aggressive expansion into critical mineral and rare earth mining processing. Hence, Vedanta will be a stock to look out for. Another stock which has recently undergone IPO is Midwest Limited, moving positively. It's India's largest black galaxy granite producer and is expanding to high purity quartz, and hence will be a stock to look out for under the PLI scheme proposed by the government. Secondary beneficiaries that we should be looking out for will be National Mineral Development Corporation. It has global rare earth exploration plans. Coal India, which has its collaboration with India Rare Earth Limited. Magnesium Ore India Limited, which is involved into diversification into magnesium to rare earth conversions. Hindustan Copper and Sona Comstar are also to look out for, as they are applicants, PLI applicants for rare earth magnets. Bharat Forge is also a stock to look out for because of the impact this particular scheme will have on the auto sector. JSW Group, ONGC, Oil India, Sundar, Magnesium Iron Ores, and IMFA are also stocks to look out for in terms of secondary beneficiaries when we talk about.
All right, so a whole host of stocks that will be impacted following this rare earth magnet scheme. But let's move on and also tell you what our experts are saying about the scheme. We caught up a whole host of experts to decode it all. Let's listen in to what they had to say.
The country depends 90% on China for the permanent rare earth magnets, and I mean, it's not just used in the automotive sector. Automotive sector definitely is a big consumer. We consume almost 800 metric tons of rare earth magnets every single year. And then there are other sectors, the defense sector, the aerospace sector, and other allied, like the windmills and stuff like that. So, in April, China started imposing export control on export of rare earth magnets. And then, there were overtures that they would be banning technology also.
It's very important to understand that when it comes to rare earth magnet, there are three processes which are involved: upstream, midstream, and downstream. As far as upstream process is concerned, some companies and some government organizations in India are already working in that particular area, which is called as rare earth oxide. Midstream is something where the companies are not existent in India as of now, or they have very minimal work which is going on. And the last stream is the application stream, which is the downstream, which is like used in electric vehicles, used in renewable, used in consumer electronics, used in defense, which is again there in the country. So therefore, the government, when they say that they're doing an integrated mix or an integrated facility, and they will give this particular tender allotment only to 5 companies, I think the intent is very clear to promote economies of scale and help them with the required subsidies in order to compete with the neighboring countries.
Okay, let's just focus from that and talk about the IMF view. IMF sees India's GDP growth in fiscal year 2027 trimmed to 6.2% if the high US tariffs stay, according to the Global Financial Body's 2025 consultation report that was released recently. My colleague Ankur Mishra is joining us with the key takeaways from the report and the rationale behind this number that they're pegging for India's economy.
Yes, important comments are coming in from IMF on India, especially the comments on the GDP growth, whereby it has maintained that FY26 GDP is seen at 6.6% and FY27 at 6.2%, with the prolonged 50% US tariff, and that consideration is there. But without that, even India's growth is expected to stay robust, as well as favorable domestic conditions are there, and that has been highlighted in IMF comments. In fact, the agency has already said that despite external headwinds, India's growth expected to remain robust. Now, these important comments are coming on the backdrop of GDP data, which is set to be released this week, and even before the monetary policy, which will be decided next month, why the growth and inflation dynamics will be kept in mind. While on one hand, the inflation numbers have been much below the forecast which has been made by Reserve Bank of India of 2.6% for FY26. But the latest number, the latest data we know of last month came in at 0.25%. And on the other side, the projection are there that for the Q2, the growth can be around 7% or so, and these are the estimates. And Q1 surprise are already there at 7.8%. It will be interesting to see how the central bank is taking all these into consideration. But for now, IMF is having a strong commentary on India.
All right, so that's about macros and IMF projection. But moving on, in a historic moment for Indian sports, Ahmedabad has been officially confirmed as the host city for the 2030 Commonwealth Games, marking the centenary edition of this global spectacle and India's return to the event since Delhi 2010. Now, the announcement ratified yesterday at the Commonwealth Sports General Assembly in Glasgow edges out competition from Abuja, Nigeria, and underscores India's rising ambition as a multi-sport powerhouse. Let's go to Times Network's sports reporter Karishma Singh, who had an exclusive conversation with Sports Minister Mansukh Mandavia at the event. Let's take a look.
हमने CWG ऑफिशियल होस्टिंग 2030 अहमदाबाद के लिए किया है, क्या कहना चाहेंगे, आपके फर्स्ट थॉट्स? बहुत बड़ा मोमेंट है ये।
मुझे इस बात की खुशी है कि 2030 की कॉमनवेल्थ गेम्स भारत को औपचारिक तौर पर घोषित हो गई। हम भारत में 2030 की कॉमनवेल्थ गेम्स को अच्छी तरह से आयोजित करेंगे। आदरणीय प्रधानमंत्री जी की देश को एक स्पोर्टिंग नेशन के बनाने के लिए जो प्रयास हो रहा है, इस प्रयास को और बल मिलेगा।
That's the word coming from the sports minister, but let's also listen in to what chairperson of Para Athletics Committee Satyanarayana had to say about the same.
India is hosting such a big event. After the Delhi, the first time India is hosting the Ahmedabad city. It's very nice. Even Ahmedabad, you must be knowing, you are hosting the World Police Game also in Ahmedabad. This will all will help you in our country sports to grow. Even sports industry, tourism, sports industry, even tourism, a lot of things can be developed. Even after the 20 years, India is a big changes there. 2010 and now 2030.
All right, that's the latest in Commonwealth Games. But with that, time now to take a very short break. We'll be right back with more news and updates on the other side.
In association with SBI, best है सबको पता है. Visakhapatnam became the center of global enterprise as the 30th CII Partnership Summit delivered investments worth 13.25 lakh crore rupees, a testament that companies driven by speed choose AP.
We are number one in ease of doing business. Now we have shifted the gear, speed of doing business.
Join us as we track the vision, the reforms and the future that begins in Andhra Pradesh at these times only on ET Now.
एंड ऑफ द मंथ और ये बची कुची सैलरी, इतने में क्या ही मिलेगा यार.
इतने में तो सिर्फ सोना ही मिलेगा.
सोना? तू ठीक तो है ना?
गोल्ड ETF, 200 रुपए हो या कम, इन्वेस्ट विद जस्ट अ डीमैट अकाउंट. एंड द बेस्ट पार्ट, ये रेगुलेटेड है एंड इट्स बैक्ड बाय रियल गोल्ड.
क्या बात है यार.
Gold ETF. It's Aaj Ka Gold. A simple way to diversify and balance portfolios with 200 rupees or less.
Uttar Pradesh is charting a new path of sustainable urban transformation with green growth, smart infrastructure and eco-friendly cities of the future. Under the visionary leadership of Chief Minister Yogi Adityanath, the state government has approved the urban green policy to promote environmental sustainability across cities.
स्मार्ट सिटी मिशन, और अभी तक तो हमने 17 म्युनिसिपल कॉर्पोरेशन को यानी नगर निगमों को लिया था, और इस बार के बजट में तो हम लोगों ने ये भी व्यवस्था की है कि हर जिला मुख्यालय की नगर निकाय को स्मार्ट सिटी मिशन के अंतर्गत हम लोग उसका भी विकास उसी रूप में करेंगे.
With modern metro networks across 6 key cities, state government is providing rapid, reliable, world-class urban transportation to citizens. 8 solar parks totaling 4,995 megawatt in Bundelkhand are set to accelerate solar expansion and significantly cut the state's carbon footprint, driving a cleaner, greener future. Integrated command and control centers established across all municipal corporations are serving as the nerve centers of urban management. Uttar Pradesh is driving a new era of smart, sustainable and future-ready urban development.
Hi there, welcome to ET Now. You're watching Market Cafe, and well, we are expecting a very positive start for the Indian markets today. Could touch life highs as well for the Nifty. But which are the sectors that one must look at? Saurabh Mukherjee of Marcellus Investments spoke to us yesterday, sharing his top picks from across the sectors. Let's take a look at which are the pockets where he finds value and what's the rationale behind it.
So we've had trend for many years. In fact, as the stocks come off, we've nudged up our position a little bit. We've had Asian Paints for many years. As the stock came off and people got resolutely negative on Asian Paints, we were absolutely delighted to jack up our position. But leaving those aside, in South India, we've bought Vijay Diagnostics. We've increased our position in Vijay Diagnostics quite meaningfully over the last year. Narayan Hrudayalaya, another healthcare business in South India, we increased the stake in that over the last 12 months. In our small and mid-cap fund, we bought Eris Life Sciences roughly a year ago. Those are the names off the top of my head: NH and Narayan Hrudayalaya, Vijay Diagnostics, Eris. And you can see the healthcare theme, right? The reason we like healthcare is I think Ayushman Bharat is a very effective scheme. And the government of India is reasonably clearly communicated over the last 2-3 years that the government itself will not provide healthcare. They will provide health insurance. And Ayushman Bharat for low-income people plus Medicare for people like us means that there will be demand for healthcare, hospitals, diagnostics, medicines, and we think we can make money from that.
All right, so those are Saurabh Mukherjee's top picks, but let's shift focus to the primary markets. India's primary market, which is preparing for one of its biggest years, with Aquarius Capital projecting an IPO fundraising of nearly 1.77 lakh crore rupees in 2026. Now, the pipeline includes some of the country's most anticipated listings across technology, finance and telecom. Ashish Shah is here to take us through all of the details.
Well, yes, primary market is in full bloom and we've seen a lot of action in the primary market over the last several trading months. And now let's put the spotlight on a few big IPOs that are set to hit Dalal Street over the next few months. And first up, let's put the spotlight on Reliance Jio, because that, remember, is expected to be the biggest IPO of calendar year 2026. The expected valuation is expected to stand at about 11.5 to 15.2 lakh crore rupees, and it is looking to raise about 70 to 90,000 crores. OYO, meanwhile, is at the second number on that list. That is looking to raise about 7,000 crore. PhonePe and SBI Mutual Fund are also looking to raise anywhere between 10 to 13,000 crore next year. So yes, 4 big IPOs to watch out for in calendar year 2026. Other than that, 2 big IPOs that perhaps should be on your radar. One is NSE and the other one is Flipkart. We, of course, don't have more details on what the valuation could be, how much money the company is looking to raise, but clearly NSE and Flipkart should also be on your radar. Now, remember, Aquarius Capital says that primary markets could raise up to 1.8 lakh crore rupees in calendar year 2026, and this is after a 5.5 lakh crore primary market mobilization that we have seen over the last 5 years. So clearly, primary markets are seeing a lot of action. We've already seen a slew of IPOs this year, and we will see a lot of IPOs in calendar year 2026 as well. Now remember, it's not just next year. Next month, in December also, we have a lot of IPOs. ICICI Prudential AMC, which is looking to raise about 10,000 crores. Meesho, CleanMax Environment, Fractal Analytics, Milky Mist Dairy, and several other companies are looking to raise a lot of money in the month of December as well. So yes, keep an eye out on all this primary action, which is likely to play out not only in the month of December, but in calendar year 2026 as well.
To watch out for from the primary market action, many IPOs coming in the next month as well as next year. But let's put the spotlight on one stock. Now, MCX, that has hit a record high and has also crossed the key psychological mark of 10,000 rupees per share. Now, the stock rallied over 65% in just 1 year. But what are the key reasons behind this meteoric rise in MCX? Ashish Shah is back with us to break it down all for us.
Well, yes, MCX has clearly been on fire. Remember, it crossed that 10,000 rupee per share mark in trade yesterday. It is up 10% in the last 1 month, and it has soared 60% on a year-to-date basis. That's the kind of up move that we have seen in the stock. Let's put the spotlight on what is driving the surge and whether the surge is actually sustainable going forward. First up, periodic volatility, especially in commodity markets, say gold, silver, that continues to drive earnings and profitability growth for the company. Average daily turnover in options has nearly doubled on a year-on-year basis in the second quarter. So volumes have been on the higher side, and that too continues to aid volume growth and profitability growth for MCX. It continues to maintain market leadership it has undertaken several research and development programs to ensure that it continues to be that market leader, and it has also launched several products. It has already launched a few, several other launches are also in the pipeline, and the company ensures that it gets regulatory approval for those new launches on time. So these are the 4 factors which continue to aid volume growth and financial profitability sustained over the next few years. Now let's also talk about market leadership. Remember, the company has been working on upgrading tech infra, which ensures that company will continue to be market leader. It continues to expand its participation depth, whether it is retail shareholders or HNIs. It continues to work on that as well, and it is also now introducing new and innovative products to ensure that it continues to be the market leader. So yes, these are the factors which continue to remain at play. Now, as far as product launches are concerned, as I mentioned, it has already launched quite a few products of late. It has introduced Silver and Silver Mini monthly expiry contracts, which is helping them aid their volume growth. So that's as far as product launches is concerned. It also introduced monthly options contracts for gold and silver. So this is one factor which continues to help MCX. It has already launched quite a few, and it has regulatory approvals in place to launch several other products over the next few years. Now, as far as management commentary is concerned, that continues to remain very bullish. They are saying that they see steady volume built up with diverse participation. As I mentioned, whether it is retail shareholders or HNI, we have seen continued participation come in. They've seen healthy pipeline of additional members. They've launched quite a few products in the second quarter. They've added quite a few members, and that trajectory is likely to continue going forward as well. Multi-asset funds are owned by mutual funds, and they continue to drive participation because they are now including commodities as a part of their multi-asset class. So that is one factor which management continues to remain very bullish about. Now, remember, the stock has already run up quite a bit, but analysts believe that perhaps the run up is not likely to sustain going forward. So currently the stock trades at about 10,200 rupees per share, and the 12-month target stands at about 10,100. So analyst community believes that perhaps the run up is not sustainable, and most of the up move is already done in the stock. So that's MCX story. The stock is up 70%. There are several factors which are driving the move. Perhaps the up move that we have seen in the last few months is not sustainable going forward.
All right, so that's the story of MCX rally this year. But moving on, let's shift focus to J&K Bank's board of directors, who have approved a capital raising plan for FY 25 to 26. This includes an equity fundraise of up to 750 crore rupees and an additional 500 crore rupees via tier 2 bonds. Mithali is here to take us through all of the details.
Rightly said, J&K Bank has got its board of directors approval for the raising of 1,250 crore rupees to strengthen its financial position and also boost the future growth. Now, the capital raise is going to be in 2 parts. The 750 crores rupees will be raised via the QIP, while the remaining 500 crore rupees will be raised via the tier 2 bonds. Now, these steps will need approval from the shareholders and the regulators, and the equity part may happen in several stages. To understand why this matters, let's have a look at the recent numbers. As per the balance sheet that they had published based on the numbers 31st March 2025, the bank's total assets have grown by almost 10%, while if you look at the investments, they have increased by nearly 18%, and the shareholders' capital, if you see the numbers there, that has grown by around 16%, and with the recent capital that they have announced, the new plan, the bank's shareholder capital is going to rise by another 8.77%. That means the bank will have more capital, which can help meet its regulatory requirements and also improve its capital adequacy. Now, overall, the capital raising plan is an important step for the Jammu and Kashmir Bank. As with more capital, the bank can obviously lend more and hence expand more. So we'll have our eyes today at J&K Bank.
Right, so let's watch out for J&K Bank. But moving on, as the D Street inches closer to the scale fresh highs, let's take a look at some of the stocks which have missed the bus and trading off their 52 weeks high. Mithali, take us through that list as well.
Right, while we see that the broader index is quite steady in its performance and Nifty is about to touch its 52-week high, there are many stocks which have actually fallen more than 30% from their 52-week high. Let's have a look at some of them. Talking about HCC for the first, we have seen a 51% decline in the stock's movement from its 52-week high, and this drop is largely attributed to the company's specific challenges, including the declining revenue, project delays and high debt levels. But here we should mention mention that there has been a consensus rating of 100% seen from analysts buy rating. Also, Cyan, we see that 47% decline from its 52-week high, and decline is mainly driven by the weaker financial results and also repeated guidance cuts seen by the management, with also 2025 resignation that we see coming from the CEO. We talk about Blue Jet Healthcare, again a 44% decline on the back of weak financial results from the company. Concord Biotech, again a 42% decline. The company's top line is being affected due to the several factors, including regulatory delays, market disruption, and also the changes, the shifts that we have seen in the US procurement patterns. Clean Science and Technology, here the stock is down 41% from its 52-week high, and mainly due to the promoter shareholding decline. We have seen that promoters have reduced their stake by almost 24%, with currently the promoter shareholding standing at 50.97%. Also, subdued financial results and still premium valuation has been the concerns hovering around the stock. BLS International Services, again 40% decline from 52-week high, and the share price dropped significantly after the Ministry of External Affairs banned the company from the future tenders for 2 years, while the consensus here stands at 40% for the buy rating by the analyst. eMudra, again a 40% decline from its 52-week high due to high valuation concern. Action Construction Enterprises also in our list with 39% decline, and again on the back of weak financial results and market volatility. Talking about Birlasoft Limited, weaker than anticipated deal wins and an uncertain demand environment have raised concern about company's near-term growth outlook, with 39% decline seen from its 52-week high. And last, I want to talk about Bansal Wires, where it's a 39% decline from its 52-week high, and based on recent financial performance and overall market sentiment, that are some cues to watch for the company that has catered to this decline. So these are some of the stocks that have declined prominently from their all-time highs or 52-week highs.
All right, so those are some of the stocks that have not participated in the rally, and they are off their 52-week highs. That's the word coming in. Thanks, Mithali, for that update. But it's time to wrap this edition of Market Cafe, but let me leave you with what experts are making of AI. Now, this as concerns continue to linger over valuations of AI tech companies. ET now spoke to global market experts to understand their views on the recent slump and whether there is a real case for concern. Let's take a look, and it's a goodbye from me.